Hi, everyone. Sean Gilliam here. Welcome to another episode of Real Estate on the Front Range. In this episode, I'm covering our monthly market update for the month of July 2022. And on that note, I hope you are all having a great summer and enjoying this weather that we're having. As we look at the data, and I'll get into it here shortly, we can definitely see that there is a market shift. The numbers aren't quite representative of it just yet, and I think that's going to be changing as we go from month to month. But as a real estate agent out there in the field, so to speak, working with buyers and sellers, we've definitely seen some changes. Homes are staying on the market longer. I would say that our inventory, while it's greatly increasing, it's not because we're getting a significant increase in new listings as much as it is that homes, when they hit the market, are staying on the market longer. We're not dealing with our market earlier this year where homes were listed on a Wednesday or Thursday, did an open house or not, and then offers were due on Sunday or Monday, and the seller made a final decision on Tuesday. That's not the case anymore. Homes go on the market. They sit there for a couple of weeks because buyers are going back and forth as to whether or not they want to make a move on a home. So the buyer pool has greatly decreased. And I think that's just because the interest rates are so high. And then pair that with the fact that we have a looming recession, if it hasn't started already, and then inflation. So we have all these factors involved that are impacting our housing market right now and giving buyers pause as to whether or not they want to purchase a home. Now, after I get through the numbers related to Boulder, Larimer, and Weld counties, I'm going to talk about some strategies that are going to be helpful to buyers and sellers. So this could be a great market to buy a home just because that buyer pool has decreased so significantly. You don't have competition, you have more negotiating power. So I'll get into some of those details after I go through the numbers. If you want more details on why this market is shifting, I did put out a couple of videos here in recent weeks. One of them is called, Will We Have a Housing Market Crash? And then the other one is, Are We in a Housing Market Shift? They're on my YouTube channel, so I encourage you to check those out. Helpful resources for you, just to give you an update and understanding of the factors involved as what's going on in our market. Also, in those videos, I give an idea of what we can expect to see in the future as far as home price appreciation and those kinds of things, so that you can plan accordingly if this is a good time for you to make a move, whether to buy a home or sell a home or both. So stay tuned and we'll talk about those. Before we get into the details of what's going on in our local market, as you know, our mortgage rates topped about 6% a couple of weeks ago. Right now, we're at about 5.7% here in mid-July as I'm making this video. Historically, mortgage rates, as we get into a recession, which, like I said, I think we are if we're not already, they start out high, but then they decrease towards the end of that recession. Part of that is to help us get out of the recession. Everybody lowers their interest rates for mortgages, those kinds of things. And that helps us to get out of it. On average, it drops about 1.8 points. And so, we're looking at 5.7% right now for a 30-year fixed rate mortgage. We could be looking at 4%. So again, good time to buy and then refinance later if you have the opportunity to do so. So let's go ahead and get into the numbers, and I'll talk about how the market is trending here in northern Colorado. All right, let's go ahead and get started here with Boulder County. Now, this is May's data. I already went over that in my last monthly market update for June. So, but I just wanted to point this out to you just to give you an idea of the key difference in inventory. When we looked at in May, there were 365 homes on the market. The month supply of inventory had climbed up to 1.2. And so we definitely saw an increase there. And now let's go ahead and take a look at our most recent data from June of this year. And you can see a significant increase month over month from 365 to 528. And our month supply of inventory has climbed up to 1.8 month supply of inventory. Now, granted, this is still a seller's market. Sellers still have some negotiating power, that kind of thing. However, I think we're kind of in that transition where we're moving towards a more balanced market. And so we'll see what happens here in the coming months. But just wanted to point out that contrast to you. As I talked about the shifting market, that is the one key metric that we're seeing the most change in, is that month supply of inventory. And again, that's because homes are staying on the market longer. But I'll go ahead and take a look at some of these other numbers. Days on market until sale is 28. So from the time it's listed until it goes under contract, it is right at 28 days. Now that's down from last year at this time. However, I think in the coming months, when you compare month to month instead of year over year, you're going to see that days on market until sale continue to increase. Similarly, our median sales price and average sales price, there's a significant increase there, 16.5% and 14.9% respectively, and that's year over year, mind you. But the average sales price of a home in Boulder County is $1,150,000. The median sales price is $937,000, and so we're seeing still homes are appreciating overall in value. But I think these numbers will soften month to month as we continue to look at the data. Percent of list price received is 103%. I would point out too, going back to May, it was 106.7%. And so I think this number will continue to edge downward as we move forward here through the summer and get into the fall. And again, that's all indicative of this market shift that we're facing. I'll do the same thing with Larimer County. If you look here, the inventory of homes for sale are 470, and the percent of list price received is 104.3%. That's from May. Let's look at June, our most recent data. The inventory of homes has jumped up to 712, and our month supply of inventory is at 1.5, and that percent of list price received is edging down, as I said it would. So we're going to see that continue to happen here month to month as we move throughout the rest of this year. Days on market until sale is about 36. Median sales price is 600,000, and the average sales price is 680,000 for a home here in Larimer County. We'll jump over to Weld County. This is again May's data. 525 homes on the market for the month of May, and homes were selling at about 3% above the original list price. And then we look over here at June, our most recent data, and we have 763 homes on the market, and the percent of list price received is 101.8%. So we're seeing that edge down overall. Median sales price year over year is up. It's at 505,000 for a home in Weld County, and the average sales price is 550,000 for a home in Weld County. So year over year, we're seeing still some strong data, but I think month over month, as we continue to compare the data, last month, this month, and then getting into the rest of the year, we're going to see a lot of these numbers start to edge downwards, start to soften more, which is indicative of the softening market that we're experiencing right now. So I hope this is helpful. I always like to encourage you, if you want more specific data towards your community, whether it be Longmont or even up in Fort Collins, I work with clients up there, anywhere around the Boulder greater area here along the Front Range. Glad to help you with that. So don't hesitate to get in touch. Or if you just want to see how much your home is worth and what's going on in this market, this would be a good time to talk, and be glad to show you the data so you can get an idea of what your home could sell for, likely, and then also give you an idea of how the market's behaving so that you can know whether or not this is a good time to sell. So stay tuned. As this next segment, I'm going to be talking about strategies for buyers and sellers. All right, now let's talk about what buyers and sellers can do in the current market conditions. As I mentioned, the market is shifting. We're moving towards a more balanced market. Homes aren't flying off the shelves like they used to. They're staying on the market longer. And so this causes everybody to shift their game plan, so to speak, in how they handle this market or how they behave in this market. So I'll start with buyers. My advice to buyers right now is buy. If you're in a position to do so, this is the time to do it. We're so used to homes, like I said, flying off the shelves, being listed midweek and being under contract by Sunday or Monday. And you only had a day or two to even think about it, depending on what the situation was. And so very difficult for buyers. They were negotiating a lot of their rights in the contract right off the table. And it was just making it very difficult for a lot of buyers even to get under contract, especially if they were financing. It was just a very difficult time for buyers. Well, that is over. Now is your chance to buy a home. Homes are staying on the market longer. The buyer pool has decreased. So now you have less competition. And even with that, more negotiating power. We're seeing more homes do price reductions. And so you're in a great position to take advantage of those current market conditions. Now, with this higher interest rate environment, and I will say higher, not high, because relatively speaking, when we're in the mid 5 percentile for a 30-year fixed rate mortgage, that's still very low. But whatever the case may be, buy what you can afford. Have your budget, know what you can afford on a monthly basis. Talk with your lender about this. They can help guide you in this process. But buy what you can afford. Buy the home that's going to be the best fit for you and your loved ones. So that way you can get yourself into a house. Again, less competition. You might even be the only person that writes an offer on a property. And it's just a great opportunity, again, like I said, for buying a home. Now, that being said, if you're concerned about those higher interest rates, like I said, 5.7% or mid 5 percentile is still low. If you buy now, either mortgage rates will go down or maybe they won't. And if they don't, you haven't lost anything. You got a home at the lowest interest rate that you could. And if they go up in the future and don't come back down, well, now you can enjoy the lowest interest rate possible that you could have gotten at the time. If they do go down, as historically they have toward the end of a recession, refinance into a lower rate down the road. As I mentioned earlier in this episode, on average, mortgage interest rates drop about 1.8 points towards the end of a recession. And again, the whole idea of that is to get the economy moving, get the housing market moving. And that's when more buyers are going to be on the market. So you don't want to be in that pool of buyers. You want to be in the pool of buyers right now that with most people sitting on the sidelines, this is your chance to get into a home and reap the benefits of owning a home. So if rates don't go down, you're still in the lowest rate possible you could have gotten into. And if they do go down, which I would suspect they will towards the end of the recession that seems to be coming upon us, refinance into a lower rate. And if you do that, you'll have a lower monthly payment and you'll have more freed up cash to do the things that you enjoy with you and your loved ones. So, and then also another important point for buyers to consider is that if you buy now, you'll continue to benefit from home price appreciation as home values are expected to go up 3 to 4% year over year for at least the next 4 years. And these are experts from around the country involved in real estate and finance. And this is what they're expecting. Now, again, we've experienced double-digit percentage increase in home values year over year. So 20%, even higher in some local communities. So that is going to soften and pull back to about 3 to 4% year over year, as many forecasts. And that's still good. That's still good home price appreciation. And if that's going to be in the forecast for the next 4 years, if you buy now, you can expect to have your home's value go up year over year, at least, like I said, for the next 4 years. So that's a great thing. So again, when those interest rates go down, you can refinance. If they don't, you still got in a fairly low rate, and you're going to be able to experience that home price appreciation once you buy this home or buy your home here in this market. You can benefit from that, as well as you build your equity by paying down your mortgage. So I think right now, again, it's just the best time for buyers to buy. The buying pool has shrunk. You don't have to forego appraisal. You don't have to come in significantly over list price. You might be able to get in at list price or even lower with these current market conditions. So again, if you're a buyer and you're in a situation where you can do so, now is the time to buy. But what about sellers? What should sellers do in this market? Again, it's transitioning towards a more balanced market. You are not in a prime position as you were just even a month or two ago, where you could expect multiple offers. People were coming in significantly over list price. They were waiving aspects of the inspection contingency and waiving appraisal even. So that time frame, that experience is over. So now you're going to have to price your home wisely. Don't try to be aggressive in pricing it, hoping that the buyers will chase you. That's not going to work. We've seen a significant increase in homes doing price reductions because buyers are not chasing after them. So price it wisely. Talk with your real estate agent, talk with me, and I'll help you to get an idea of what's going on in the market so that you can price it in such a way that home buyers will see that and pursue that over the competition. Also, something to be considering too is that be prepared to offer concessions to give you an edge over the competition and to move your property faster. I've heard of some sellers offering concessions for buyers to pay down their mortgage rate, to help pay for closing costs, what have you. And that just makes it easier for a buyer to write an offer on your property when you put out those kind of concessions on the table for them up front. So be prepared to do that. It might not be the best option right away, but be prepared to do that if your home isn't moving as quickly as you would like. And on that note, be prepared to not have your home go under contract immediately. This is especially important to consider if time is an important factor in your next move, in the sale of your home. So plan all these things out. Plan on maybe your home's going to sit on the market for a month before it goes under contract. And a typical transaction takes about 30 days, we'll say. So plan on at least 2 months before you hit kind of a deadline of where you have to be out of that house and on into your next one. So plan accordingly. Another piece of advice for sellers is if you don't have to sell, you can wait until next spring when the market is typically more active, and or you could wait until interest rates go down more. We saw it top out at over 6% here a couple of weeks ago. Right now, they're at about 5.7% for a 30-year fixed rate mortgage. Maybe wait until the rates go down and that buyer pool increases, because now they're saying, okay, now we can get more bang for our buck. Now we're ready to buy a house. So this could be a good time to just kind of sit and ponder. If you don't have to sell, if you don't have to move, to sit and wait until those rates start to go down, and thus you're going to get more buyer activity on the market. So those are my thoughts on what buyers and sellers should do in this current market. I also have my buyer and seller guide, so feel free to get in touch with me. I'll send you those to you for free. I have PDF files that you can take a look at. Good things to do well in advance of your next move, so that you can kind of mull over and educate yourself on things you can do to put yourself in the best position. Check all the boxes, dot all the I's, cross all the T's, so that you're ready to go when it's time to buy a house or to sell a house, or both. And then also, I have local lenders that I work with. They know the market well. There's lots of newer loan products out there that can help buyers and sellers, especially if you're in a situation where you have to sell a home to buy your next home. There's different bridge loans and other loan products out there that make it easier for you, so that you can write an offer non-contingent and then sell your home after you close or go under contract on your new home. So we are seeing more offers being accepted as contingent offers, but there's a lot of stress. There's a lot of moving parts related to that. So again, if you qualify for it, some of these loan products that some of these local lenders have could be a good fit for you in selling your home and purchasing your next home. So I hope this is helpful. If you have any questions, don't hesitate to get in touch. You can reach me here at 970-313-6706. Or at the end of the video, I have more information as far as my email address, my website, and just good opportunity to get in touch and bounce your questions off me. I'm here to help. We'll look forward to talking to you soon, and stay tuned for my next episode that comes out next month. Take care.